how to manage your business numbers, and the tool I'm going to focus on today is Xero. So what I'll do is we'll go into the reporting side of things. So this can apply to anyone other than Xero. There can be QuickBooks people or My Old people. So this accounting system, even though it helps you enter data efficiently and has these, cool little automation tools, it also gives you really valuable information about how your business is performing. So there's a series of reports you can get out of this software. So the first one we'll look at is the profit and loss statement. So this pretty much tells you whether or not the business is actually, making any money or not. And that's really the key. So I think someone asked a question is, how can my figures help me make better business decisions? Knowledge is absolute power. Like, to have a viable business, the business needs to be profitable and you need to have a healthy cash flow. So without those two, especially cash flow, without those in place, you essentially don't have a business. You're shutting the doors. Like, a business can't run on love and fresh air alone. You need cash. And what you're doing needs to actually work and make you money. So where the profit and loss statement comes in, it actually tells you whether or not your business is making money. Like, you don't want your expenses to be more than your sales. That's just not good. It's actually costing you money to keep the business open rather than the business making you a tidy living. And if you can see from this profit and loss statement that the business isn't making money, then you've realised you've got to make some serious changes, whether you cut expenses, whether you go out and do some more marketing and get some more clients, you put your prices up. So there's all sorts of different things you can do where a report like this can help you make great decisions. But the key is, with these reports, unless your bookkeeping's 100% up to date, they're pretty useless. So the numbers are complete. So for this report, you see, if I go back, I'm just going to take the screen. There is actually, I'm showing you a bit of a lesson here about the value of keeping your bookkeeping up to date. You see how there's still 19 items to reconcile. And once these items, so until these items are reconciled, they're not going to show up in your profit and loss. So when you're processing these transactions, this is where they end up. So if your bookkeeping's not up to date, these numbers are not going to be accurate. And you can see that there's expenses that haven't been entered in, possibly income that's not entered in. You could be seeing, customers' invoices that haven't been allocated yet. So Xero that's in pilot format, which I'll show you now. So you see where it's got, so if you go into business and business snapshot, look, this is very basic, but so this is breaking it into graph format. It's showing, you can show last financial year, you can show the last quarter, you can show the year to date. The data's pretty limited in this demo file, but what it can actually, so we'll go last quarter, so, because that'll show you a bit more. Okay, so this is breaking up the profit and loss. It showed it's made a loss of 4,133, which if you're seeing it on this, you're like, yeah, okay. But the fact that you're seeing it going down, if it was a profit, it will be going up like this. And you're seeing here trends of income going up, showing your expenses are going up. Here it shows your largest operating expenses, your gross profit margin, which is pretty important. So your gross profit margin is essentially your sales minus cost of goods sold. What cost of goods sold is the direct cost related to, providing your product or delivering your service. So for example, if you're selling widgets, a cost of goods sold figure would be the cost of actually buying the widgets to on sell. This shows your overall cash balance. As I said, the bookkeeping's not up to date in this account, so the figures are a bit skewed. Average time to get paid, that's pretty important. So Xero is pretty basic in the graph format. So the main dashboard here, there's other graphs on here which shows you invoices owed to you. You know, it's separated into, you know, week overdue, it's due this week. And if you click on it, it'll show you a list of what those are made up of. Show you the balance sheet quickly. So this is the most important report you'll ever use. And it's even more important than the profit and loss statement. A lot of people don't understand the importance of this. So and also reports. So if we go accounting reports, so there's all these different, you know, in your own time, there's all these different reports you can play around with in your own time. So you see where it's got these stars? If you have the star in blue, it shows up as a favourite. So if I click on accounting, and you see how it shows up in my favourite, so it saves me from going into this main reports menu. So now I can actually, because I've favorited the balance sheet, so I can just click on the balance sheet. But if you haven't favorited it, then you would find it in this reports menu. So we'll go to June 20. So what this shows, basically what a balance is, it's a snapshot at a point of time in what the business has and what they owe to other people. So there's assets, and actually what the business has. So this shows things like your bank accounts. Accounts receivable is how much money your customers owe you, which is pretty important. So you realise, oh, 16 grand. I either need to get my bookkeeping up to date, or I need, if my bookkeeping's up to date, then I really need to start chasing my customers for money. These are the things that you own, such as your computer equipment, your land and buildings, your motor vehicles. Your liabilities is what you actually owe to other people. So your accounts payable is how much you owe your suppliers. Your GST is how much you owe on your BAS. So that's how much GST you need to lodge on your BAS. And if you've got staff, you need to submit tax on behalf of your employees. So that's how much. So that's all listed in here. You'll notice that these don't show up in a profit and loss statement because cash and this will be a whole other webinar altogether. So cash and profit are two completely different things. You know, a lot of cash flow, things that affect cash flow don't show up in a profit and loss statement. And equity is pretty much how much money the owner's invested into the business. So this is all the profit they've retained over the years. And if an owner decides to top up a business, put in 50 grand, it will go into here as well. So ideally, you want your equity to be more than your liabilities. So a sign of a really healthy business is higher in the equity section and lower in the liabilities section. But if you have businesses that are massively dominant in this section, you know, that can indicate some, you know, a few problems there that, you know, they're relying on debt, basically. Best practice to get into, if you ever get an invoice from anyone and if they're giving you 30 days, if you're not paying it straight away, you still need to put it into Xero because that shows up in accounts payable that you actually owe these people this money. So good practice for you would be to forward it to HubDoc. So as soon as you get that invoice from that fabric supplier, forward it straight through to HubDoc as a purchase and then code it. And what happens is that'll sit in Xero, the expense will be recorded, but it'll show up as a debt that you owe that supplier. It'll say that you owe that supplier 5 grand. And I'll show you a report in a minute where you can see that. So a lot of people don't realise that they should be doing that. They only record things that they're actually paying, and that's really not the case. That it's important that you put in everything. Like, you know, it's what you owe. Future, you know, obligations are just as important as what's happened in the past. Actually, they're more important because you can see what's coming up and then you can actually see whether or not you can meet those obligations or not. So that's where a lot of people get into trouble, where they don't understand what's coming up in the future, and then when the future comes, they don't have resources to pay that supplier or to pay that GST bill and all that sort of thing. So as you can see, accounts receivable and accounts payable, that total alone doesn't really mean a lot. Like you probably want to know who owes me what, when is it due. So we can go back into our reports menu. there's what's called aged payables, age receivables. So this gives you a snapshot. So this gives you a snapshot with all your contacts, you know, and what each of them owes you and how old that debt is. And there's another report you can run called Age Receivables Detail, and that itemises every single invoice as well. So that just gives you an idea of what you need to chase. So that's basically breaking down the detail as to what's in the balance sheet. And there's an aged payable summary as well. So you set up a budget. So if you go into reports, because obviously, and there's a tool, and then you can run a report which compares budget to actual profit and loss. So you see here it's got budget manager, reports. And budget manager.
Yep.
So that's... So we've got an overall budget here. So these 3 columns are showing the actuals from the previous 3 months, and you can choose not to show them. They just give you a guide, because predicting the future, the past is a very good predictor of the future. So this just helps you to set your budget. You don't have to have... And this demo company, they've already put some budgeting data in there. So you see they've got to June 2021. So the way you just sort of, so for example, I'll put this number in here. You see this green arrow. So if we click on that, you know, you can say it's going to be, you know, $500 for the whole month, for every month for the next year. You can just put in $500 and it populates each one. You can adjust by an amount each month. You can put it up by $10 each month, or you can do a percentage each month, like here. So look, this is very basic. Most people like to do budgeting in an Excel spreadsheet because there's simply more features to play around in. But for most people, if you just want something that's not complicated, if your business is reasonably simple to predict, something like this is quite sufficient. So up by $200 each month. So that's populated each of those. And you can do the same. You can, if you choose to, you can just put in a number. Before you start, if everything's blank, you can just export it into an Excel spreadsheet, and and it pretty much gives you a template. So if you're someone who absolutely loves Xero, Excel, which, you know, a lot of people are more comfortable in Excel. Naturally, you know, that's what people know. And you've got more features to use in Excel with formulas and that sort of thing, then you'd knock it out in Excel, and then you can import it. And once you're finished in Excel, you can import it back into Xero. So the formatting has to be the same, but if this is too basic for you, which I suspect for a lot of people it is, and you prefer Excel, then absolutely export the template into Excel, and then you know, do what you need to do, and then upload it straight back in. And then what you can do when you're running a profit and loss statement, you can actually compare, you know, the budget to the actual.
Mm.